Welcome back to A to Z Equities, where we cover all US listed equities from A to Z. Today, we're discussing a very well known brand, American Airlines. We're going to be rating American Airlines in five different metrics: industry, price, growth, financial position, and management, each on a scale from 1 to 5 stars. At the end, we're going to give a blended average rating for American Airlines on a scale from 1 to 5 stars, a total rating. This video is not financial advice. No buy or sell recommendation is being made here. I personally do not have any position in American Airlines, whether long or short. This video is simply for informational and educational purposes to help investors gain a better understanding of this company, better understanding of how to value stocks in general. So, with all of that said, let's get into it. In terms of industry, I don't think we have to spend too much time on this one. As mentioned, American Airlines is a very well known brand. Now, let's just take a quick look at American Airlines Investor Relations page. American Airlines was formed in 2013 with the closing of the merger between American Airlines and US Airways Group. So, obviously, American Airlines brand dates back prior to 2013, but the current corporate structure was created in 2013. American Airlines and American Eagle offer an average of nearly 6,700 flights per day to nearly 350 destinations. I think everybody understands what this business does. Now, let's quickly skip over to the Wikipedia page for American Airlines. They're a major airline in the United States, headquartered in Fort Worth, Texas. It's the largest airline in the world when measured by scheduled passengers carried, revenue per passenger mile. Okay. So, in terms of industry, we're going to have to give American Airlines a pretty poor rating here. That's because the airline industry is a notoriously difficult industry to make money in. Warren Buffett has expounded on this at various times in the past, how difficult the airline industry has been over the course of decades for companies to make money in. Although Warren Buffett himself bought a bunch of airline stocks prior to the COVID crash and then sold those at a big loss during the COVID crash. And as far as I know, hasn't entered any airline stocks since. And so perhaps the airline industry is has a little bit of an easier time being profitable these days, but nonetheless, just based on the history, how tough it's been to make money in this industry, we're gonna have to give American Airlines 2 stars for its industry. Now, moving on to price. So let's move over to Seeking Alpha, and the first thing we're going to want to know is, what is this company's market cap? What is the total value of all shares outstanding? We see here 6.99 billion. And so that's the total value of this company. That's actually surprisingly low for a company like American Airlines. If I were to ask the average person, if you had to guess, is American Airlines a small cap, medium cap, or large cap company? I think most people would guess that it's probably a large cap. Here we see it's actually a medium cap company at only a $7 billion valuation. So that's very surprising. And maybe the enterprise value of the company is significantly higher, meaning maybe they have a lot of debt. And so that factors in to the overall valuation of this company. They probably do have a lot of debt. And we'll get into that. We'll see about that as we go through the categories. But in any event, in terms of the price, so when we go through the price and we compare the price of American Airlines to its earnings, its sales, its book value, all that, the price multiplier that we're going to be using is 6.99 billion. That is the current price, total price of the shares of the company today. And so now that we know that, let's move over to the financials for this company. We'll start with the price to sales ratio. So as we can see in the trailing 12-month period, meaning the last 12 months that have been reported, the revenues are 49.866 billion. And so obviously that is vastly, vastly higher than the $7 billion market cap. If we were to skip over to a calculator and just divide that $6.99 billion market cap by this $49.866 billion sales, we see that American Airlines has a price to sales ratio of 0.14. That is an extremely low price to sales ratio. The total revenues here are even higher. I don't think we need to do the math on that, because as we can see, American Airlines has a very, very low bargain basement price to sales ratio. Now, and that's not surprising, because as we said, American Airlines market cap is very, very low compared to what we would expect. And so it's not surprising that the revenues are much, much higher than their market cap, because obviously American Airlines is a huge company. It would be very surprising if they only had, less than $10 billion in revenue. So as we see here, they have more like 50 billion in revenue, and their price to sales ratio is very, very low at about 0.14 or even lower if we were to go based on total revenue. So now moving down here on the income statement, we go to net income. We see they actually have a very small loss here for the trailing 12 months. Before that, they had 2023, they had very solid profitability. So if we were to compare this net income number, it would actually be a single digit price to earnings ratio for 2023. Clearly, they've lost a bunch of money thus far in 2024. Based on this, they're not going to get a very good score for the price to earnings ratio. Even if we were to go back a few years, obviously 2020 was a very difficult year for airlines. Travel was basically halted. They lost almost $9 billion, which is more than their entire current market cap. Before COVID, they had a pretty consistent track record of profitability, but obviously since COVID, it's been a little sketchier. 2022, they only had 127 million. Last year, they had a good profitable year. If we were looking at this company a few months ago, it might get a good mark here, but just based on the trailing 12-month number, which is negative, they're not going to get a very good score for the price to earnings ratio, which is actually negative at the moment. And so moving over to the free cash flow, let's go to the cash flow statement. Scroll down to the bottom where the free cash flows are going to be listed. We see they actually are free cash flow positive, 675 million in levered free cash flow the trailing 12-month period. That's down from 2023, but up from 2022. We see again before COVID. Well, before COVID, it was a little sketchy from year to year. Sometimes they had positive free cash flow, sometimes it was very negative. But we're going to go based on the trailing 12 months. So if we were to just again divide the market cap of 6.99 billion by 675 million, we get a price to free cash flow ratio of about 10.35. And so that is actually quite good. Perhaps not for the airline industry, but just objectively speaking, for the average company, a 10.35 price to free cash flow ratio is very good. And so American Airlines isn't looking too expensive. Based on income, definitely is looking expensive. Based on revenue, it's looking very cheap. Based on free cash flow, it's looking pretty cheap too. Although obviously that figure is kind of inconsistent from year to year. And so let's move over to the balance sheet. We'll take a look at the price to book ratio for this company. Here we see the assets, current assets, long term assets, current liabilities, long term liabilities. We'll get into this a little bit more when we're evaluating the company's financial position. But for now, we want to know what the equity looks like, what the book value looks like. As we see here, it's negative 4.7 billion. So that actually is going to definitely weigh against American Airlines in this analysis. In terms of tangible book value, significantly worse at negative 10.88 billion, about 10.9 billion in negative tangible book value. So that's, significantly, the negative tangible book value is significantly larger than the company's whole market cap. And so, as we suspected, they've got a fair bit of net debt here. Down here, we see they've got negative 30.5 billion in net debt. And so that really takes the company's enterprise value a lot higher than its market cap. So, as we suspected, part of the reason why American Airlines is so cheap is because it's got a lot of net debt. But be that as it may, these ratios are not looking so good. On price, again, the price to free cash flow on a trailing basis doesn't look bad, but if we look out over a few years, it looks a lot less attractive. If we were to look at price to sales, that would look attractive, but that's about as far as the attractiveness goes on the price front. And so I don't think we can give American Airlines more than a 2 for price. The saving grace, kind of saving this company from an even lower rating on price, is its price to sales as well as its current price to free cash flow. But again, the last few years of free cash flow weigh against that. So overall, we're going to give them a 2 for price. Not off to a great start. American Airlines has a 2 for industry, a 2 for price. Let's keep going on to growth. Now, let's go back to the income statement where we see that the sales growth has been pretty solid, especially since 2020, which is not exactly a shock. 2020, their revenues were down like crazy from 2019 when they had 42.9 billion down to 15.3 billion. 2021, they get back on the growth track. They've been on the growth track since. Their trailing 12-month revenues are significantly higher even than they were back in 2019 pre-pandemic. So they're going to get pretty solid scores for revenue growth. Now, in terms of income growth, so they're not going to get very good scores here. Obviously, they've recovered from the massive losses that they took, especially in 2020, but also a $2 billion loss in 2021. Obviously, they've recovered since then, but the trailing 12 months number does not look good here. So they're not going to get a very good score on the net income growth. Now, just moving over to the cash flow statement, let's see how their free cash flows have grown over the last few years, or if they've grown over the last few years. And we were just looking at these figures. Not really a growth story here. Again, 2020 was a terrible year, $9 billion in negative free cash flow. Since then, they've been free cash flow positive, and that factored into the price rating and kind of saved them from an even lower rating than they got. But the growth story has been very inconsistent. We see a big dip recently from 1.6 billion in 2023, only 675 million in the trailing 12-month period, and so that is not going to do them very well in terms of the growth. So again, revenue growth looking good, earnings growth and free cash flow growth not looking as good. If we move over to analyst estimates for future growth, let's see what those look like. So, for starting with revenue, we see here 2024, they're forecast to have 1.5% revenue growth. From there, they're projected to have mid to low single digit revenue growth moving forward. Not too bad. Again, that goes hand in hand with the revenue growth that we've seen over the last few years. So, they are expected to kind of reach new heights in revenue year after year, although that's projected to slow over time. We can see here 2027, 2028, only two analysts, one analyst. So those numbers should be taken with even more of a grain of salt than the analyst estimates in general. So what we're seeing over the next few years is decent growth. This year low single digits, the next couple of years mid single digits, according to the analysts who are forecasting growth rates for this company. If we look at earnings per share, that's where the really impressive growth comes in. This year, down 61% is the forecast, but moving on to 2025, we're expecting massive growth. The analysts are expecting massive 83.4% growth. Year after that, more high double digit growth. And then again, moving on to 27, 2028, that's only based on a couple of analyst estimates. But these numbers definitely help out American Airlines, both the revenue forecasts and the earning forecasts. Definitely help them out in the growth category. Let's give them a 3 for growth because, again, top line growth looks pretty good. And earnings growth, although it doesn't look good, and free cash flow growth doesn't look good, but over the next few years, analysts are expecting that growth to accelerate majorly. And so let's give them a 3 for growth. Now, moving on to financial position, we go back to the financials, open up the balance sheet, and let's just see what their current financial position looks like. So they've got close to 9 billion in cash and short-term investments. They've got 2 billion in receivables. Total current assets 14.8 billion. If we go down to current liabilities, we see 24.61 billion. That's really bad because their current liabilities are a lot higher than their current assets, and that suggests they're going to have to either monetize long-term assets to pay down those liabilities, or they're going to have to issue new shares or take out new debt. So that's definitely not a good sign. It doesn't look like they're on such great financial footing out the gate. Now, in terms of their long-term debt, they've got a lot of debt, as we kind of saw before. 27.2 billion in long-term debt. Their total liabilities of 68.9 billion are higher than their total assets, and so that's again not what we want to see out of in terms of having a strong financial position. Lastly, let's go over to the income statement and just see what this company's interest expense looks like. Interest expense is about 2 billion a year. Based on the fact that their net income is very inconsistent to negative, their free cash flows are also rather inconsistent. It would take at least a few years, of cash flow at this point just to pay off their interest expense for 1 year. Not a great sign. And so Again, just not looking good in terms of financial position. I've seen worse, but this is not so great. We're going to have to give them a 2 for financial position. And then lastly, moving over to management. So, first of all, let's check out how this company is performing versus the analyst forecasts. So, we go over to the earnings surprise tab here. It will show us over the last 2 years how American Airlines has done in terms of beating or falling short of expectations. Not bad here. They beat in the last 8 quarters, they've beat on earnings per share 6 times, missed twice, beat on revenue 5 times, missed 3 times. That's pretty good. It shows that management is mostly under promising, over delivering, managing expectations well, and that is a good sign. Now, if we move over to insider transactions, we can see here it doesn't look like there have been really any purchases or sales by insiders in the last 6 months. We do see down here some transactions, but it looks like these are probably, especially since these are all identical figures here, 12,908 shares for each of these directors. Presumably, these were not open market purchases, but rather share based compensation that the directors received for serving on the board. And so basically no activity. That's fine. That's not going to weigh against the company. It's not going to weigh for the company. But it is good that insiders aren't selling shares at the very least. Now, moving over to let's check out whether they pay a dividend. I would suggest that maybe they shouldn't, but they are an airline. And so presumably they do pay a dividend. And we see here they actually do not pay a dividend. And so that's probably smart considering that their financial position is quite weak, and the fact that they have negative earnings, largely, at least at the moment, they have negative earnings. And so they don't pay a dividend, but that's not going to weigh against them because that's probably for the best. And lastly, let's check out the share count here, see whether the share count is going up, coming down. Diluted weighted average shares outstanding, we see that the share count ticked down significantly in the middle of the last decade from 2015 to 2016. It fell by over 100 million shares. Presumably, they were buying back shares then. 2017, 2018, 2019, buying back shares. 2020, the number starts going up. 2021, it goes way up. Not surprisingly, obviously, the company had to raise money during this time. And we see it kept increasing until 2023, peaks at 719.7 at the end of 2023, and then 655.4 million, down significantly. Now, I don't understand how this happened. I don't know why the company would be buying back shares, and we could just look over at the cash flow statement to see whether that's the case, whether they have been using cash to fund share purchases. Um, to me, that doesn't seem very smart. We see there is stock-based compensation of 102 million a year. Um, and that is unsurprising based on what we saw over on the insider transactions page. Not very good in terms of management. We don't want to be giving shares away to management, but if that's how they're getting their compensation or part of their compensation, it's certainly not the end of the world. And then if we just scroll down to what are we looking for? Repurchase of common stock. There's actually no repurchases of common stock. And so I don't know how the share count could have fallen over the trailing 12 months without any repurchase of common stock. But the fact is that it has. And so that's a decent sign. Overall, for management, uh, I think we're going to give them a 3. Can't really get any better than that based on the metrics that we've looked at. Especially the stock-based compensation, the fact that shares have mostly risen, although they've dipped a little bit recently, but they mostly risen. They do pay a lot of stock-based compensation at 102 million a year. So we're going to give them a 3 for management. So now we've ranked American Airlines across all 5 categories. To recap, we gave American Airlines a 2 for industry, a 2 for price, 3 for growth, 2 for financial position, and 3 for management. And so that gives American Airlines an average score of 2.4. Not exactly inspiring, but that is the blended score for American Airlines based on these 5 categories: 2.4. Again, this is not financial advice. No buy or sell recommendation is being made here, but hopefully this is helpful to those who may be analyzing American Airlines or trying to figure out how to analyze stocks in general. This is not an exhaustive list of categories you should be looking at or how you should be analyzing them, but this is a quick overview of a few of the key categories for American Airlines. Again, 2.4 is the score for American Airlines. Not a very great score, but take that for what it's worth. In any event, thank you so much for tuning in to A to Z Equities, and we hope to see you back for another video in the near future.